How do you get intrinsic value in a market that's overpriced?
Well, you say it's overpriced. I would say it's high-priced. Overpriced is a judgment call. We would agree that U.S. stock valuations are on the high side relative to history. That would tell me to be a little less aggressive than usual, but not necessarily to get out. You know, getting out is really a big step. Most of the time in my 55 years in this business, it's been a mistake. Either you get out and it goes up, or you get out and it goes down and you forget to get back in and it goes up without you. It's just a matter of calibrating, in my opinion, your behavior between aggressiveness and defensiveness. When things are a little high as they are, a little more defensive than usual. But this notion of risk on, risk off, in or out, buy or sell, that's too black and white. It's not fitting for the world we live in.
We're seeing herd mentality. Moms and pops getting into everything that institutional investors are getting into. And usually, historically, that's the time to get out.
I was with you until you said out. Just remember this. And everybody, you know, as I said, we're not market timers. We're not macro forecasters. You could have said, if you had a great foresight, you could have said in 2019, I think there's going to be a pandemic. I'm going to get out. In 2021, you could have said, I think that Russia's going to invade Ukraine. I'm going to get out. You would have been right about the events, but it would have cost you a lot of money. Not only do we never know what's going to happen in the bigger world, but we also don't know how the market's going to react. And so to be dogmatic and to say, it's high, I'm getting out, is a mistake. Warren Buffett, who always says it best, says don't bet against the United States.
Warren Buffett has taken money off the table, more than $300 billion worth.
Why?
He says there's nothing to buy. Well, valuations are high.
Well, but what percentage? You know, people look and they say, well, Buffett sold some stocks. Does that mean we should get out? What percentage of his stocks did he sell? Probably rather small. So it's not a broad statement. Buffett's not selling all his stocks, and neither, I think, should anybody else.
You talk about how you hate making calls, but Goldman came out to say that it sees 10% upside in the S&P from now through the end of 2025. Is Goldman right?
10. Well, that's pretty good, isn't it? On the other hand, Goldman, I think, is fair to say, put out a report 3 or 4 weeks ago, in which they said that the PE ratio on the S&P 500 is high. So as opposed to 10% average return over the last century, they're projecting 3% for the next decade. That's rather cautionary. It's not get out, it's not sell, but it's moderate your expectation. On the other hand, 10% gain between now and the end of 25 would be quite nice. What this shows is that investing in the short run is very uncertain, and nobody should think they really know what's coming, and most people should take an almost passive approach. The idea is it's good to invest. It's good to invest in the United States. It's good to invest over time, and it's bad to try to mastermind it in the short run. Point is, investing is a good thing. Do it early, do it a lot, so that you can build the nest egg. Don't screw it up.